If you're sitting on crypto profits and eyeing a stateside move, stick around. This could be the blueprint that changes your life. Let's jump into it. It's a crisp morning in February 2026. As you're watching this and you're glued to your screen watching your crypto portfolio explode past that magical $100,000 mark, your heart's pounding, adrenaline surging, that euphoric "wow, I made it" moment washing over you. Bitcoin's rallying, Ethereum's staking rewards are paying off, and suddenly you're not just an investor, you're wealthy. But here's the twist. What if that digital gold mine could catapult you beyond screens and charts, straight into the American dream? A new business, a life in the US, unlimited potential. Sounds like a pipe dream. Let me tell you the story of Alex Thompson, a UK-based entrepreneur. This isn't some hype-filled crypto success story. It's the gritty, step-by-step saga of how Alex navigated the clash between volatile crypto gains and rigid US immigration rules to secure an E2 treaty investor visa. We'll unpack the highs, the heart-stopping hurdles, and the clever synthesis that made it all work. Let's rewind to where it all began, the dream. For Alex, it started back in the early 2020s, grinding away at a digital marketing consulting firm in the UK. Alex had a solid client base, helping small businesses with SEO, social campaigns, that sort of thing. Revenue was steady, life was comfortable, but there was a cap, the US market. That's the thesis of global opportunity, a powerhouse economy, innovation hubs like Silicon Valley or New York, where ideas scale exponentially. It's the established system, backed by decades of treaties and policies that make visas like the E2 possible for nationals from countries like the United Kingdom, Canada, or Japan. The E2 Treaty Investor Visa is a gem. You invest substantial capital in a US business, run it yourself, and boom, renewable status. It's a potential stepping stone to permanent residency. No lottery, no endless waits. Just prove you're investing legitimately and you're in. Alex had been dabbling in crypto since 2017, not as a day trader flipping memes, but as a long-term hodler. Alex believed in the tech, blockchains, decentralization, Ethereum smart contracts, revolutionizing finance. Starting small, with what he could afford to lose, buying Bitcoin on Coinbase, swapping for altcoins during dips, staking ETH for passive yields. Through the 2022 bear market crash, Alex held firm. Then in the 2025 bull run, fueled by regulatory clarity like the Genius Act and institutional adoption, the portfolio surged. One day, Alex refreshed the app, $100,000 plus. It was surreal for him. Freedom in numbers. Alex daydreamed nonstop. Leasing an office in Austin or Miami, hiring American talent, pitching to US brands, the energy became intoxicating. The dreams meet reality, and that's where the antithesis hit hard, the disruptive clash. Crypto's very essence, its borderless nature, the wild volatility that turned modest investments into six figures, was now a liability. US immigration isn't compressed by wallet addresses or blockchain explorers. They demand a lawful source of funds with a crystal clear, audible trail. Alex's money's journey? A messy mosaic. Fiat from a UK salary deposited to Binance in 2018, traded to ETH on Uniswap, staked on Lido, moved to a cold storage wallet during the FTX collapse scare. Privacy features like zero-knowledge proofs, great for security, but a nightmare for proof. Alex scoured Reddit threads, immigration forums, stories of denials flooded in. One person lost their shop because a single exchange transferred black to timestamp. Another because staking rewards weren't taxed properly. The thesis of stable, verifiable finance demanded paperwork. Crypto's antithesis offered innovation, but opacity. Alex's stomach dropped. Was this wealth monopoly money to them? This called for a synthesis, harmonizing crypto's cutting-edge potential with immigration's old-school rigor. Alex assembled a team, an immigration attorney with crypto cases under their belt, and accountants specializing in digital assets. They mapped a plan, liquidate methodically, document obsessively, build a business that screams legitimacy. It wasn't quick, and it wasn't cheap. It took months of work, thousands in fees, but it was the bridge. If you're in Alex's shoes, know this. The path exists, but it's narrow. Miss a step, and your dream crumbles. The liquidation phase was make or break, the heart of turning antithesis into synthesis. One rule, make your funds so boringly transparent, they're unquestionable. Crypto's Wild West vibe? Erase it. Here's how Alex did it in 3 exhaustive stages. with lessons to save you headaches. Stage 1, the Cashout Odyssey, from digital to dollars. Don't sell haphazardly. Alex avoided decentralized exchanges like Uniswap, which is too anonymous. Instead, everything was consolidated to Coinbase, a US-regulated powerhouse with full Know Your Customer and IRS reporting. Why? It embeds identity in every transaction, creating an official ledger. Before touching the sell button, Alex went full forensic accountant, dug into old accounts, finance statements from 2018 showing the initial $5,000 pound deposit from HSBC salary, Kraken's CSVs for 2020 ETH buys during COVID dips, Wallet Explorer screenshots with tax IDs proving transfers to a ledger. Alex even noted gas fees paid in ETH, every penny accounted for. Tools like Coinly helped aggregate, but cross-verification was done manually to avoid errors. The common pitfall is ignoring taxes. The IRS treats crypto as property. Sales trigger capital gains. Short-term, up to 37%. Long-term, between 0 and 20%. Alex's crypto accountant calculated basis, which is the original cost plus fees, subtracted from the sales price. Gains? About $60,000 taxable. Filed Form 8949 in Schedule D, immediately paying the taxes. This wasn't optional. It's proof. Imagine your visa officer sees a paid tax bill. Bam. Legitimacy stamped. Alex sold in tranches over a week, 20K chunks, to minimize market impact, then wired directly to new Chase business accounts in the US. Result? Bank statements showing clean Coinbase deposits, no mystery wires. Stage 2, defining substantial and picking the business. With cash secured, define your investment. A2's substantial is contextual. $100,000 works for consultants, but not factories. Alex leveraged expertise is a US arm of the UK marketing firm, focusing on e-commerce and SEO. Low capex, high scalability. This is perfect. Avoid passive plays like real estate. It must be active and job creating. So what's Alex's business plan? A 60-page beast co-authored with a consultant. Executive summary, mission to help US small businesses go digital. And how about the market analysis? $200 billion industry growing 15% year over year. They have a detailed budget, $24,000 showing a 1-year lease and co-working spaces, $20,000 for laptops and software, $15,000 to incorporate in a specific state, get trademarks and have legal fees, $25,000 for advertising and marketing, $16,000, a 3-month salary for a US marketing assistant. They had 5-year projections. Year 1, revenue was $150,000 from 10 clients, scaling to about $500,000 by year 3, hiring 3 more Americans every year, proving non-marginal. It's about economic contribution, not just your salary. And here's the pitfall. Vague plans get denied. Use data, cite reports from McKinsey or Gartner to back growth. Stage 3, putting the capital at risk. This is the scariest part. Committing funds pre-approval. There's no holding back. It's irrevocable. And here's the antithesis terror. Crypto's liquidity, gone. Alex signed the lease, which is non-refundable deposit, bought equipment, has Amazon receipts, filed for incorporation. For the rest, marketing and salary, escrow with a title company, agreement, funds release on Visa stamp, and they revert on denial. Lawyer drafted USCIS friendly, skin in the game, Alex proved, minus total ruin. By the end, Alex's crypto was reborn, a US entity with assets ready for scrutiny. If untangling your crypto for big moves like this feels overwhelming, we've got the perfect resource. At Numeratus.org, your go-to for crypto accounting and wealth strategies, join our premium community for $100 a month. Get expert Q&As, Visa prep templates, tax masterclasses, and more. Whether it's E2 or optimizing your gains, we're here. Don't let bureaucracy block your breakthrough. Sign up today. With funds committed, the paperwork marathon began, the ultimate test of synthesis. Alex's attorney and team compiled a binder thicker than a novel, organized tabs, no room for doubt. And here are the essentials. DS-160 form, passport, UK birth certificate for nationality, ownership proof, articles of incorporation showing 100% control. Now let's talk about the file, not just the end bank statement. Full chain, UK pay stubs, funding initial buys, exchange histories, blockchain tax links via Etherscan, Coinbase sale confirmations, US deposit. What about Alex's tax return? Golden. Form 1040-NR for non-residents, showing gains reported, personal affidavit, a 5-page narrative explaining crypto basics. What's a wallet? What's staking? What's the strategy? HODL, not trade, and why it's lawful. Assume that the officer is a newbie. Keep it simple. What about your business docs? Plan, lease, receipts, escrow, forecasts, job creation timelines? Alex submitted this all via the London Embassy portal. There were fees, and there were biometrics that the portal needed. The wait? Brutal. 6 weeks of anxiety. What if they spot a gap? Prep was key. Mock interviews twice weekly, questions drilled. Why marketing? Market saturation? Answer, niche and an AI-driven SEO for Alex's purposes. Crypto volatility? Sustainable? Point to taxes. Hold long. And what's the exit plan? Compliant wind down. It's an emotional roller coaster, sleepless nights, but the synthesis empowered Alex. Crypto's proof fused with the paperwork structure. And then it came down to interview day at the London Embassy, February 2026. It was chill in the air. There was waiting room nerves, families, entrepreneurs, all chasing dreams. It was Alex's turn. He went to a window booth. There was an officer in his mid-40s, binder open. They started with the basics, UK background and consulting history. Then the consulate asked, what is the cryptocurrency funding about? From salary fiat to buys, holds, and compliance sales. Highlighted taxes. The officer could potentially probe a 2022 transfer and will need explanation. There's going to be tense flips through pages. Thorough documentation is what's key here. And is the business viable? If it is, you're elevated and approved. You get your passport stamped later. E2 valid for 5 years and is renewable. Now, Alex is in Miami in his office. That crypto seed thrived. He had his first hire, a Florida grad handling socials. He had clients, 3 US, e-commerce brands. Revenue was ticking up. Families adjusting, kids are in school. The dialectic resolved. Traditional immigration challenged by crypto, yielding empowered, innovative entry. Technology bends to rules and unlocks the future. This wasn't luck, it was grit, translating blockchain to bureaucracy. What are the key lessons? There has to be a flawless trail. Trace from fiat to US dollar out, no gaps. There needs to be a substantial fit, $100,000 for services, justified via detailed plans. There needs to be a smart risk, escrow plus commitments, balance, commitment, and protection. There needs to be an active business. There needs to be job creation. It can't be passive. You need to show economic impact. The pros, immigration lawyer, crypto accountant, and that's non-negotiable. Treaty country crypto holders, it's achievable. Bridge the worlds, claim your dream. Are you inspired now to make your move? Every case is unique. Check the description for consultation links. If this resonated with you, subscribe for more crypto to real world stories. Thanks for joining. Go turn your portfolio into possibility.